You know, I've never thought that passwords and logins would become something of the past. But here we are. Face ID, fingerprints, big tech is already moving on, and guess what? You probably are too. Maybe without even noticing. Logging into your phone with your face, unlocking your laptop with a touch, that is slowly becoming the new normal. Passwords are dying, and today I will tell you how I'm making money with a trend. Before we begin though, in case you don't know me, my name is Victor and I run Capital Edge Research. If you're interested in under-the-radar stocks with a lot of potential, check it out. But the way I'm making money with the rise of biometrics is through a little unknown stock called AWRE, listed on the Nasdaq ticker AWRE. As I've written on my website, I started my position in the stock at the end of 2024 at a price of $1.85. Today though, this stock is trading at $2.12, which means I'm about 14% positive. However, I believe that's just the beginning and this stock could go far beyond that. So in this video, I will explain why I think that in 3 key points, and in the end, I will also give you a gift. So, the first reason I think AWRE could be a great play is because this stock has been simply forgotten. And as I will explain soon, that's excellent for us investors. But as we see here, since its peak in 2021, AWRE stock has dropped by about 70%, going from around $6 a share to the current $2. And later on, I will explain why that happened. But as I said, AWRE stock is forgotten. Barely anyone is paying attention to this company. For instance, if you look it up on X, formerly Twitter, you won't find much of anything about it. Besides, if you search on Seeking Alpha, you will see that the latest article about AWRE was written back in 2019. Quite old, right? So AWRE was simply forgotten. Meanwhile, biometrics is on the rise, and there are not a lot of pure-play biometric stocks listed out there. So imagine what could happen to this stock once this sector starts gaining more of the market's attention. This stock could simply explode, especially because, you know, there are not that many shares available in the market, since insiders alone own about 30% of the shares outstanding, as we see here. So that's the first reason why I think this stock might go up quite considerably in the long run, because it is forgotten, its market cap is not that big, at only about $40 million, and lastly, because a good amount of this company's shares are held by insiders. So once AWRE improves its numbers and starts showing some growth again, the market might start paying attention to it again. But by then, it will already be late for investors. It will be like trying to get a table at a restaurant with just a few seats that suddenly became super popular. I mean, the price of dinner will simply skyrocket. That's why I said this stock still being unpopular is good for us investors, because it gives us the chance to grab one of the few seats before the price explodes. And by the way, as always, nothing in this video is investment advice, okay? Now, the second reason I believe AWRE will continue to go up is that while biometrics is on the rise, this company isn't new to the game. You see, AWRE has been around for over 30 years. 30 years, okay? So it has a lot of expertise to offer in a market that is just starting to heat up. And even though AWRE is still a tiny company, a microcap, it already boasts huge clients such as Interpol, the US Department of Defense, the Australian Department of Defense, and Itaú, which is one of the biggest Brazilian banks out there. Now, do you think it's easy to land clients like these? Of course not, right? In fact, they serve as a testament to the quality of AWRE's products. After all, the US Department of Defense, for instance, wouldn't rely on something that isn't top-notch. So I believe AWRE will be very well positioned to serve this growing biometrics market, and that eventually this will translate into revenue growth, profitability, and cash generation. And ultimately, if that indeed happens, we might see AWRE trading at much higher multiples than it is today. So that's the second key point. Biometrics is growing, and AWRE seems to have a lot of expertise and quality products to serve this growing demand. Now, before we get to our third key point, I'm leaving a 40% discount coupon down below, in case you want to join Capital Edge Research. I still only have 2 investment ideas there for now, but both are great opportunities. So hurry up, especially because these stocks are starting to move. Now, the third reason I believe AWRE stock might go higher is because of its relatively low valuation. As we see here, this company's market cap stands at $47 million. But since AWRE holds $21 million in net cash, that means this company is trading at an enterprise value of just $26 million. So you are paying an enterprise value of $26 million for a company that's generating $16.6 million in revenue. That means that today you would be paying for AWRE, for the stock, roughly 1.6 times enterprise value to sales. Now, I don't think that's a high multiple to pay for AWRE. I mean, it might not be extremely cheap. I certainly bought it much cheaper. However, considering the clients AWRE has, the high insider ownership of this company, the fact that more than half of its revenue is recurring, and also considering its impressive 93% gross margin, I don't think that's expensive at all. But look at the clients AWRE has. For instance, we could say that these clients alone could be worth 10 million, maybe even 15 million. Some people might think that sounds crazy, but the truth is, the clients you have do add value to your business. Imagine how much time and effort it takes to land Interpol as a client, or the US Department of Defense. That's why, depending on the price, sometimes it's worth buying a company just for its client base, because then you don't have to waste time and energy chasing those contracts yourself, because you already have them. So I don't think paying an enterprise value of 26 million for AWRE, I don't think paying 1.6 times enterprise value to sales is expensive. Again, it's certainly not extremely cheap, but in my view, it's far from being expensive. Now, the question is, if this company is so good, why on earth has it been forgotten? That's a fair question, right? But that happened because, as we see here, AWRE hasn't delivered any real growth in recent years. For instance, the company ended 2022 with 16 million in revenue, then it went up to 18.2 million, and now it has come down to 16.6 million. And of course, the market doesn't like to see that, right? The market likes to see growth. However, it's not because a company is not growing that it doesn't have any value. But that's in part why AWRE has been forgotten. And by the way, this platform I'm using here is called Seeking Alpha, and I'm leaving a link to it down below with a discount in case you are interested. But you see, there are more reasons why AWRE has been overlooked. For example, the company has been unprofitable over the past few years, and on top of that, it's been burning cash. For instance, in the last 12 months alone, AWRE has burned $3.7 million. And of course, that's not something you want to see, right? Now, if that's the case, if AWRE has been unprofitable, burning cash, and has not been growing, why the hell am I invested in this company? Well, it's simple, because investing is about the future, not the past. Sure, AWRE hasn't been profitable or growing in recent years, but that could change pretty rapidly. After all, since AWRE has a massive gross margin, most of the new revenue coming in might quickly cover its remaining operating expenses, with any extra flowing straight to the bottom line. You see, AWRE, as I understand it, has a lot of operating leverage. So in my view, it wouldn't take much for this company to radically improve its numbers. And if that happens, AWRE stock could be strongly repriced upwards and start trading at completely different and much higher valuation levels. So that's why I decided to start a position in the stock back when it was trading at $1.85. Because I can see how the picture could change here. Now, I will try to bring AWRE's management team for an interview so we can better understand what's going on inside the company. But if you listen to their latest conference call, you'll see that they are currently restructuring and are in contact with several Fortune 500 companies. Now, I have no idea what might come out of it, right? But it could turn into something really positive, something that could drive growth and profitability. Well, we'll see. Now, to close this video, today I explain in 3 key points why I believe AWRE stock could continue to go up. And about the gift I mentioned at the beginning of this video, I actually already gave it to you. It's the 40% discount coupon on my website, Capital Edge Research, which I left down below in this video's description. However, I don't think that was very clear, right? So here's another gift. If you're looking for a great stock, Check this one out. I think you won't regret it. Anyway, that's it for today, and see you next time.